Thank you and good morning. Being a Stanford alum myself, it's great to be selected by the Stanford Angels. My name is Amar Anand. I'm a co-founder of Auro.AI, a robo-advisory and social investing platform. Now, having worked in asset management for the last 20 odd years, it's been clear to me that there is something wrong with the way our financial markets are set up. It's a structural problem where 90% of markets are controlled by 10% of mostly institutional investors. So if you're an everyday investor, the cards are typically stacked against you. We created Auro.AI to change that. Our core belief is that everyone has the right to financial inclusion. Our USP is to leverage AI to not only democratize finance, but to give everyday investors a better shot at winning. We leverage technology to teach and empower them to invest responsibly and thereby build long-term wealth from markets. Now, democratizing finance is something you've heard a lot of in the last few weeks, given the congressional hearing from Robinhood and Reddit. That's why I'd like to start here with an evaluation of some of the pain points inherent in current models and how our model is different. Gamification of investing, while that's brought tens of millions of users to open up self-directed accounts, 3 times more brokerage accounts have been opened in the last 1 year than in the prior 3 years combined. And that's just not in the US, but globally, it's been a mega trend. We want to ride that trend as well, but we think it's dangerous when platforms use behavioral algos to lure inexperienced investors into impulse trading, mindlessly following peers or motifs of trending stocks like they would in their social media accounts. Investing is serious and risky business, and most historical studies show these kind of forays end in tears, especially for retail investors. So Auro.AI curates long-term institutional-grade investment portfolios for retail investors that are tailored to their risk appetites and goals. Many of these platforms have an incentive to induce high churn and leverage. While ostensibly they're free for trading, their payment for order flow arrangements are now public. Robinhood attracts the highest rate for equity trades, so they charge around 17 cents per 100 shares. Schwab, by comparison, charges 11 cents. And why is that? That's because the Citadels and Virtus that trade with Robinhood know they have the most unsophisticated investors, so they're willing to pay more as they can make more money off them. And that, by the way, for options trading is even higher. Robinhood earns 64 cents per options contract versus 17 cents for shares. So there's a huge conflict to steer clients from trading stocks to options. It should be no surprise to you why Robinhood earned about 2/3 of their $500 million of revenue last year from options trading. But this carries much higher risk for the everyday investor, given the higher inherent leverage. Alex Kearns, a 20-year-old who committed suicide not that long ago because he found this massive options trading liability in his Robinhood account, is still fresh in our minds. And therefore, at Auro.AI, we make $0 from any kind of trading revenue, which keeps the conflicts at bay. We also charge $0 in management fees and just get paid via profit sharing if we make you some money. If you think about it, no platform exists today that really creates an investment DNA from a young age. We do that via adaptive learning modules, investment masterclasses, and expert networks that can be accessed by even those who don't have any background in finance. Number 4, most robos are black boxes as they wrap ETFs and have double fee structures because you need to pay the robo manager and then also the underlying ETF manager. We have no double fees as we wrap mostly individual securities. And finally, most platforms offer only liquid assets. We offer both liquid and illiquid assets, and most recent long-term studies have shown that illiquid assets have outperformed liquid assets. And so we provide that via tokenization and electronic execution of complex securities. So without further ado, here's the product. Auro.AI leverages quant techniques like artificial intelligence, machine learning, mean variance optimization. Now, truth be told, folks are still skeptical about letting machines manage their money. And so while robos have been around for a few years, they haven't taken off as much. What makes Auro.AI unique is that it's the world's first robo that combines both quant with traditional bottom-up fundamental investing techniques. So this could be analysis of a company's financial statements, competitors, industry, macro trends, softer cues like management meetings where you can tell from their body language what the next quarter is going to look like. All of the things that an institutional investor would have access to, but we provide these signals to retail investors. So we truly democratize finance, not by selling everyday investors to hedge funds like some other models do, but by selling hedge fund tools and insights to everyday investors to give them a better shot at winning. All this is not just an idea. The app is ready and in final phases of product launch. There's two separate versions. As you can see here, there's a retail app and a professional app. We've already applied for and got many of the licenses required to execute this model globally. We're focusing on US, UK, Australia, China, Hong Kong, India, Japan, and Southeast Asia, which may sound like a lot of countries to you, but these have been our core investment markets since inception. We're regulated already by the SEC in the US, by SEBI in India, by the PBOC and SFC in China and Hong Kong, to name a few. We launched the Auro.AI portfolios in October of last year, and they have performed very nicely. We show here one of our moderately aggressive portfolios. It's got a vol of 20%, as you can see here, has delivered an annualized return of 210%, outperforming the MSCI World by 28%, with a staggering Sharpe of 9.37. Once again, remember, every portfolio is different depending on your risk appetite and goals. This is what a standard Auro.AI portfolio would look like. It's multi-asset class, multi-sector, multi-geography, expressed for individual securities, though, that we can teach and engage you with. Our Auro Rabbit is a proprietary neural network-based crypto investment platform, and this has crushed it. If you're into crypto, you get access to this. It's up an annualized 600% in the last 6 months, outperforming Bitcoin by over 100% while having superior risk-adjusted returns, i.e. a Sharpe of 8.8 and a Sortino of 15.5. Now, it's worth noting that unlike most of the fintech competition that has come from tech teams disrupting fin, we're a fintech company disrupting tech. And that matters because, as the recent capital adequacy saga with Robinhood has shown, asset management and broker-dealers are complex, regulated businesses, which many tech disruptors don't fully understand. We, on the other hand, come from a very regulated, multi-jurisdictional asset management background and have dealt with these complexities for years. I've personally worked at some of the most prestigious investment companies globally and have helped build two of the most prominent asset management companies from the ground up here in Asia. This and our long track record of market outperformance augurs well for helping facilitate our clients to do the same. Our business model, as you can see here, is a hybrid across B2B2C and B2C. On the B2B2C side, we've got conversations underway with the #1 bank in Hong Kong, with the #1 insurance company in China, with the #1 bank in the UK, the #3 bank in Singapore, one of the top 10 brokers in the US, to name a few. On the B2C side, it's targeted at both retail and professional investors, and the app forks into one or the other based on your risk onboarding. Now, we've been at this for a couple of years now and have put together a strong management team. It's a combination here, as you can see, of experience and youth across tech, finance, and asset management. And very much like our target markets, the team is very international, combining talent from both the East and the West. Finally, on the financials, we've seeded the entire app development infrastructure and team costs so far ourselves. We're now looking to raise between $5 to $8 million as a pre-Series A to fund the next round of development. As you can see from this exhibit, we hope to make $60 million in revenues and about $16 million in post-tax earnings by 2025. However, to get there, we foresee a cash burn of $5 to $8 million over the next 3 years. The funds will be used mainly for sales and marketing. We think that we've got a CAC of about $8.50 for the B2C side. We intend to make some key hires on the B2B side. And finally, we want to enhance our product development, legal, and ops infrastructure. So with that, thank you very much. Happy to go into more details during Q&A.